What is rental arbitrage? Rental arbitrage is when you identify a property, you rent it out, and you rent it out with the intention of renting it to someone else for more money. So in the real world, what this looks like is that you sign a 6-month to a year lease with some entity, and let's just hypothetically say you're going to pay them $1,000 per month in rent with the hope that you can then re-rent it for more money. Let's say $1,300 a month or $1,500 a month. Then you're going to make $300 to $500 more a month, and that is why people do rental arbitrage. My name is Erin Spradlin. I make videos around self-property management and also small-time investors. This includes people that are looking to do arbitrage, because my assumption is most people that are doing arbitrage are thinking one day they're going to own their own property or they're going to move into it, or they already own properties and they're supplementing with additional arbitrage properties, meaning they have some kind of lending component or cash component that limits them from buying more properties. So arbitrage is the best way to continue to make money and acquire properties when you are not in a position to further buy additional properties. I have real estate books that you can find on Amazon. I have free resources on the Stand store. The link is on the screen. And also I offer consulting. You just need to reach out either through the Stand store, or you can email me at erinandjamesrealestate.com. If you're finding value out of this video so far, please give this video a like. And if you want notifications on future videos around self-property management and or being a small investor, that being someone with 10 properties or less, subscribe and you'll get notifications when these videos come out. Now let's talk about who would do arbitrage. I kind of touched on this when I was talking about who would subscribe to this channel, but primarily people that are doing arbitrage are people that aren't in a position to purchase their next property. What this looks like typically is you have someone that has seen the benefit of real estate, likes the money, considers it passive income, or maybe a little bit of work, but work that's worth it to them, but they don't have the money to acquire their first property and or an additional property. So someone may already own a property, but they have a lending limitation which prevents them from buying their next property. So often this comes up when you have changed professions, or you are over leveraged with your property, or you're just not comfortable with it. We also see people that are new to the real estate space get into rental arbitrage because they want to test the waters without having the full commitment. So in that case, you are renting out someone else's property, they have the full risk of the mortgage, and you are only on the hook for the year or the 6 months or however long your agreement and your lease is that property. Now let's get to pros and cons of arbitrage. So you do not have the same commitment that the property owner has. So if you try out arbitrage and you learn that you don't enjoy it, or you're just really bad at it, or the market isn't there, then you have done a 6-month to 1 year experiment with limited risk. Now there is still risk. If you have to pay $2,000 per month on that property, you're looking at a $24,000 risk if it remains unrented for the entire time, which is unlikely. More often people have to take lower rents than they want, or they miss a month here or there, but you shouldn't be taking a bath on all of it. You may find out that you're out of pocket $5,000 at the end of the year if you haven't done it right. So that's the pro with arbitrage, is that you can get your feet wet without having a big investment. Let's talk about the cons when it comes to rental arbitrage. The first is the lack of equity. I have read this stat a few times, which is that when you are doing real estate investing, 80% of your returns come in the form of equity, meaning appreciation. So that is why a lot of people that are in real estate investing do not care that much about cash flow or what their rents are, because the assumption is long term, they're going to make the most money off of the house or the property appreciating, and they will really see the advantages of real estate investing when they go to sell that place. When you're doing arbitrage, you don't own the place, so you are basing all of your income and all of your strategy off of cash flow. The problem with cash flow is that if you have a month or two where it doesn't rent, all of your cash flow potentially has been knocked out. So the second problem with arbitrage is the really tight margin. And the tight margins become a bigger issue when you are renting from like an apartment complex that is pretty well established. And what I mean by that is that apartment complex will have set their rate, and the people that are shopping for your place will be shopping for your place based off of what that apartment complex has set their prices at. So they're going to see everybody else's and they're going to say, well, everybody else is just charging $1,000, but you're charging $1,500. Why? You are then going to shoot back and say, well, it's because it's furnished, but you're going to have a smaller pool for that. And unfortunately, they're going to come in with an expectation of everybody else is $1,000. Right to think that it being furnished is worth more, but you just have to make that argument and you have to present it to them. And that sometimes can be an issue. The third problem is that you have to furnish the place. place, and you have to furnish the place in a way that doesn't cost you more than what you're going to make on the property. You just need to be really clear on what you estimate you're going to make above what your rent rate is. The furniture isn't going to eat up all of that. The next issue with arbitrage is your vacancy rate. I usually tell my consulting clients 80%, and I think 80% is conservative. I think you can do better than 80%, but I just want to be overly cautious in an arbitrage situation because you are not getting equity or appreciation out of the rental. And then the final problem with arbitrage is that you don't have a set rate. So you might have a very successful arbitrage for a year or maybe even 2 years, but then when it's time to renew the lease, the prices have gone up in your area and your rent goes up. Hypothetically, your midterm or short-term rental ratio rates should be tied to your long-term. So if the long-term goes up, the midterm and the short-term should go up too. But you don't have 100% confidence in that. So if it does go up, you might then be in a position where you don't think you can get those elevated rates. So while that is a worry in the future, I don't think you should limit yourself from an investment now that makes a lot of sense, because rates potentially could go up, especially if you're renewing the lease, because if you're renewing the lease, then you don't have an obligation to be there and you can get out if it doesn't. Arbitrage makes sense when you are not in a position to buy, because if you are in a position to buy, you should buy before you should ever do arbitrage because of the equity component. So arbitrage makes sense if you can't buy, if you have run your numbers after you have furnished the place and after you have taken into account vacancy rates and you are happy with the amount that you estimate you can get monthly on that property. Want tips and tricks on how to list on different platforms? I recommend checking out these next videos.